Euromonitor's unique global insights and offering a distinctive perspective on how card players, especially retail banks and issuers, can position to benefit from this paradigm shift to mobile. As we all know, moving from cards to mobile, displacing the financial card, is a major shift, uncovering many opportunities and threats in the market. Now, today's presentation, the goal of today's presentation is to look at, basically show you things happening on the consumer side and how they can reshape the entire landscape and the mobile industry. And at the same time, we'll be looking at some strategies worth replicating in the market here. Just a quick, in a few words, for those who are not familiar with Euromonitor, just to provide a backstory on who we are. Euromonitor is a global market research company with an office here in Dubai. We offer our clients with a unique strategic research on global insights in both syndicated and consulting formats. Now, our syndicated system covers more than 20 verticals, stretching over 80 countries, with an extensive network of 800 in-country analysts in these countries. So basically, this provides us with a very close proximity to information sources, which reflects our accurate data and gives it this local flavor. Now, what I would like to show you today in today's presentation, it basically features data from 4 of our systems, which is basically retailing, consumer food service, countries and consumers, which includes data on socioeconomical data, income distribution, spending by sector, and demographics overall. And a big bulk of the data is coming from our consumer finance premier system, which we're going to have a look at in a second. So for the first section here, analysis of consumer segments, I'm going to highlight some of the key trends for potential uptake by the mobile commerce and suggest to why the UAE is best positioned to transition to the mobile commerce. Whereas in the second section, I'm going to pose some scenarios to show how the mobile phone is a major disruptor for the traditional retail banking structure. Because as we all know, the mobile phone is a major disruptor, and at the same time, it's reshaping the entire landscape. Last but not least, here we have the last section, which is mobile strategies worth replicating. I'm going to focus on some of the interesting examples cued from around the world, which will help providers in differentiating their products, the new products basically they're launching. What we're looking at here is basically the mobile penetration in 2010. That's a percentage of the mobile penetration per household across 7 markets. What we have here is, as we can see, there's a robust mobile installed base. There's a very high penetration in most of the markets here. As we can see clearly, Egypt is an outlier. That could be for different reasons, whether it is cost implications or regulators or just the infrastructure. However, according to Euromonitor, Egypt does rank up to go up to 60 to 65% in the next few years. Now, what I'd like to show here is the main idea behind the slide is to help transition this penetration from making phone calls to actually making mobile commerce transactions. But that's not the case in Egypt. In Egypt, it's basically increasing the amount of mobile phones in the market. As we can see here, UAE has the highest penetration across these markets. And similarly, in the next slide here, I'm going to be looking at the urban population, where we can assess urban population in the next few years until the year 2015. And the reason why we're looking at urban population is simply because it's a key driver for mobile commerce. So currently we're looking at eight of the markets. The orange bars would actually explain the absolute growth in these markets, whereas we have these blue dots, which are basically the CAGR across these markets. As we could see, we could significantly see that Egypt and Saudi will experience a significant growth in terms of movement to the cities, and that's in both an absolute and in CAGR, as opposed to the UAE and Bahrain. Now, in UAE and Bahrain, we will definitely see a growth in the next few years, but that's from a much smaller base. But the point here is to show that there's a significant migration to cities and urban areas, and at the same time, we do have a strong installed base in terms of the mobile infrastructure and so on. So the next slide here, we're going to be looking at the mobile commerce demographics, and then again, that's in 7 markets. What we can see here, we're assessing basically the percentage of population in the sweet spot, which is between 15 to 34 age group, simply because we think this age group will be the most users of mobile commerce once it emerges. And then we're assessing the average gross income of a portion of that sweet spot, which is 20 to 24, and that's in dollars. Now, surprisingly here, Qatar and UAE have the highest sweet spot population and at the same time, the highest average gross income. Whereas that's not the case in Egypt and Jordan. Now in Egypt and Jordan, a significant population is young, but the money is not there. Now the idea behind this presentation or this slide specifically is to show the amount of money available on the table for potential intake by the mobile commerce or potential capture. Next slide here, we're looking at the internet penetration in the region, which will help us assess the comfort level in the usage in these markets. As we can see, not surprisingly again, UAE is leading these 7 markets, and this tells us basically that there's a very high internet penetration and comfort level in terms of using the internet, which we could possibly look at transitioning this to start spending. Now, in the next slide here, I'm going to be assessing the internet as a purchasing vehicle, which I call the non-wallet channel, where we would start assessing how much people do spend on the internet and how much of that we can take to the mobile commerce. So if you look at the next slide, we're looking here at, most of this data is coming from our retailing system. On the left side, we're looking at both markets, Saudi and the UAE. Now the reason why I narrowed down this case study is to take a deeper dive into these markets and get a better transparency. Now, given that this analysis is 2010 against 2015, but if you look at this internet retailing spend in both markets, given that they're still at its nascent stage here, but still we could see the amount of money available on the table, which we could possibly move forward to the mobile commerce. Now, what I can see here is UAE is roughly about 6 to 7 times of that in Saudi, and that's per capita in terms of dollars. So if you look at the right side here, that's data again from the retailing system. Now we're looking at a specific spend by sector. So apparently the consumer electronics channel is the highest spend. That's where the consumers are choosing to spend their money on the internet. So as we could see in 2015 in Saudi, it's roughly about $95 million will be spent on consumer electronics, as opposed to UAE, which is estimated to be $250 million. Now the point here is these channels are going to drive the internet spend, and what I would do as a bank, I would definitely consider partnering up with some of the major consumer electronics retailers in the region, say Plugins or Sharaf DG or Extra in Saudi, to drive the mobile spend, because that's where the money is in the future. So look at the next slide here. Now we're starting to move away from consumer trends, demographics, income, and so on, to actually looking at contact points instead. This data here is from our consumer food service system. We're assessing the quick service restaurants, specifically the chained fast food, and that's because these are the most likely adopters of the NFC contacts. So again, I narrowed down the search here to look at Egypt and Saudi. Now again, in this case, if you look at the left side, we're assessing in millions of dollars the value in these in this industry, basically. So as we can see, there's a significant high growth in both of the markets, especially in Saudi, which is rising steeply. Now the reason why I chose here value is simply because I'd like to look at things in terms of dollars and how much money is available for basically potential capture by the NFC industry. Now I'm not saying that everybody's going to walk into McDonald's in Saudi and Egypt and make a purchase using their NFC-enabled handset, but that's just in terms of scale. As opposed to the right side here, we're looking at units instead. Units basically gives us more visibility to the market in terms of contact points, how much it's available, and so on. So obviously the more contact points available in Saudi, which as we can see there, the more people exposed to the NFC contact points are most likely to be banked or start using mobile commerce. So that's the whole point here in terms of this slide here. Obviously, we can see Saudi is much higher than the Egyptian market. Now, in here, I decided to look at this since it's something quite critical and important to look at and consider in terms of the barriers in mobile commerce. Apparently, some of the barriers is basically the heavy reliance and dependency on cash. Again, we're assessing here Saudi and the UAE in the year 2010, and this data is coming from our countries and consumers system. So if you look at the left side here, Saudi is basically, the majority of the people are reliant on cash transactions and paper cash checks and so on, which is approximately 80% in terms of value, which is similar to the UAE, which is about also 80%. Now that could be for different reasons, whether it's cultural or distrust of the financial services or a high percentage of the unbanked population. But the point here is, if you look at the orange slice, which is card payment. Now, we anticipate this card payment is obtainable by mobile commerce, so that's what we're going to have to focus on and try dragging that to the mobile commerce. Now, in the next section here, I'm going to identify some potential impact of the mobile commerce on the traditional retail banking. So we're going to look at how banks will change their communication with their clients, how the mobile phone will affect the brick and mortar model, and so on. Now, the point of the slide here is just to show that as mobile phone starts emerging and people are using it for financial services purposes, it's basically showing us here that this is a new means of communication with the client. It's a new means of banks to secure their customers and at the same time protect the ongoing communication, simply because if, as a bank, you're not communicating with your customer now, I'm pretty sure your competitors will actually start this conversation with them. So the mobile phone offers a lot of opportunities in terms of advertising, new means of communication, and marketing campaigns, basically, and a greater access to the banking facilities by the customer and acquiring unbanked population too. This is quite an interesting slide where I chose these three brands here. These are some of the major retailers globally who are already moving to the financial services. As we can see here, Tesco is already a bank offering full product portfolio, except for mortgages, which they're eventually moving to. Walmart is trying to be a bank in the States, but they're not offered the license. However, they started as a bank in different markets like Canada, for instance. Now, the idea here is for banks to protect their territory, simply because the very one thing that we have to remember that these are retailers first, as opposed to financial services, and they're starting to move to financial services. But they have the expertise in reaching out to clients. So banks basically have to learn from these retailers and how to sell to clients, how to communicate with them, and so on. In other words, just defend their territory and at the same time improve their communication, and at the same time basically look at different ways of advertising their products and so on. Now, one way to do that is through the QR codes. I'm pretty sure we saw a lot of QR code slides today in some of the presentations, but I'm quite sure you're familiar with that. QR code is basically a two-dimensional barcode which encodes data such as website address or phone number or any types of information. And by the way, this QR code here, if you take a photo of it, it links you up to your Monter's website. We've been using this for quite a while, and it's quite helpful. It drives up traffic to the website. So the idea here is for banks to start using QR codes to link it up to their product launches, new products, services, or apparently just their website.